Hello and welcome to NJBIZ Conversations. I'm your host, Jeff Kanige. My guest today is Eric Lewandowski. He's a partner at Sax LLP and the leader of the firm's transaction strategy and transformation practice. Eric, welcome back.
Thank you for having me. Glad to be
Okay, did I
back.
did I get the practice right?
You did,
Okay.
exactly.
We've talked before about M&A, and I wanted to get you back to get your views on where things are going, where you see them going in 2025 based on your experience. First of all, I want to talk about what's going on in Washington.
Yes.
We just had a panel discussion about the first 100 days of the Trump administration, what people might want to expect. I was just in Washington with the Chamber of Commerce on their walk to Washington trip, and there was a lot of discussion, as you can imagine, about what was happening there. So, and one of the things that I picked up and what I heard all over and over again was that the previous administration was I mean, we're talking about M&A now, is
Mhm.
perhaps unduly hostile toward M&A, and a lot of folks are expecting that to change dramatically as we get into the Trump administration. First of all, I'm curious, do you share the assessment of the Justice Department and the FTC under Biden? And B, how do you see things changing, and how do you think that the new policies, the new antitrust approach that this administration is obviously going to take, will affect deal making as we go through 2025?
Yeah, sure. I think under the Biden administration, there was certainly some scrutiny. I wouldn't go so far as to think of it as being unjust, just kind of a
Okay.
different approach that was maybe a bit stricter than others historically. I think the big news coming into 2025 under the Trump administration has been slightly less regulatory, although there's certainly that, but slightly more on the side of what are the net effects of some of these tariffs. So coming out of 2024 had a decrease in deal volume. Deal values went up both globally and in the US, but deal volume holistically had gone down. A big
Okay.
driver of that was the Fed policy and the Fed saying, hey, we want to make sure that we time interest rate reductions with reductions in inflation.
Okay.
And I think Trump shares that same philosophy of let's reduce interest rates. The interesting sort of curveball has been with some of the more political moves that have come up around tariffs. Tariffs inherently will raise prices. They'll get passed
Right.
on to consumers. And so now there's a question mark of, well, are prices going to fall in the right amount of time and right sequence that they were projected to
Right.
then time up well with interest rate reductions? And I think it's created this interesting pause in deal making coming into the new year that wasn't as expected. I think people are coming into 2025 basically saying, okay, we've gotten past some of the hard stuff in 2024. We've held interest rates pretty steady. We now have started this decline in interest rates in the second half of 2024. That's going to continue, may take longer. But now we've got an interesting curveball on tariffs saying, okay, well, how does that impact things? And should I be pausing doing deal making if I'm a private equity fund or corporate acquirer or otherwise until the timing is right? Uh,
Okay.
so that's been a really interesting revelation that's come up.
Yeah, that is interesting, and you frankly teed up the discussion very well because there's a lot of things there that I want to get into. And the first thing I was going to ask you about was the M&A market in 2024.
Yeah.
How you just said it kind of paused near the end of the year. Was that for the entire 12 months of 2024, or was there? It seems to me there was a time when there was some deal making going on, maybe perhaps early
Yeah, sure.
middle part of the year. But then it did. I think you're right. It did again. Just sort of my impressionistic sense is that it kind of tailed off a little bit. Is that
Exactly.
what you're saying?
Yeah, the first half of 2024 had higher deal volume than the second half, and I
Okay.
think I think uh, overall it was down holistically. Obviously, being driven largely by interest rates,
Okay.
but there was a variation between the first half and the second half of the year. I think as there was real movement by the Fed to reduce interest rates, people said, "Okay, let me think about getting ahead of that." You read stories about Blackstone and others who said, we know interest rates haven't been reduced as quickly as we would like, but we're getting ahead of that with different deals that we're doing because we know they're going to come down, and we're going to take that sort of risk on us to sort of play that game out. I think coming into 2025, there's big question marks, right? Are interest rates going to decline at the same rate that they were expected to with all of these new tariffs that will, frankly, are popping up every day with new kinds of tariffs, whether it's steel or other products? I think that uncertainty is going to be more the driver now on a reason to pause because now it's very hard to predict when that next wave of interest rate reduction might come and what the impact would be on prices being inflated, which is
Okay.
the key
And
driver the Fed is watching for for some of these
Okay.
reductions.
All right. Well, that was the question. Was what first of all, what was the main driver in 2024? Because the
Hmm.
stock market was fairly strong through most of the
Yeah.
year too. I'm guessing valuations were relatively high. On the other hand, acquisition currency was probably more valuable. You mentioned interest rates. There was also, I think, a sense, especially as we got closer to the election, of just what the uncertainty of geopolitical uncertainty, war in the Middle East, war in Europe,
Right.
all those things. I mean, what do you think was the main driver in through 2024 and going into 2025, is in terms of how the market shook out in the last 12 months?
Yeah, there are a lot of factors, and all the ones you mentioned are highly relevant. I think the biggest one people are watching for is interest rates. In
Okay.
simple terms, even doing small acquisitions, if you're a lower middle market fund, first step is to take on leverage. And if the economics just don't work because the leverage is too expensive, you can't even go further to think about all the other risks that could be involved in an acquisition. So I think even just the simple fundamentals weren't in place in a way that would accelerate deal volume that are starting to now emerge in 2025. And I think you're right. There's a lot of other factors going on in the marketplace that are to be considered. War in
Okay.
the Middle East. Are there other international issues that may weigh on deals as well? All that, it puts pressure on deals. But the biggest one is certainly the pace of interest rate reductions, because the starting point is if the economics don't work, you can't go further in your analysis.
Okay. And the Fed did cut rates several times
Yep.
in the second half of last year. They've indicated that they're going to pause a little, at least it seems that as though they're going to pause. They're going to sit back and wait for things to shake out. Again, is that sort of uncertainty kind of creeping into decision making about
Yeah.
M&A as well?
For sure. So that
Mhm.
uncertainty then just leads to people trying to figure out when that next cut is going to come, and then not just the next cut, but the sequence of the next cuts thereafter. So investors want to see, especially private equity investors, want to see that there's good momentum around continued interest rate cuts, so that their debt levels will become less expensive over the course of time as they begin a process of not only acquiring a platform, but then the bolt-ons that are to come that get tagged onto that platform. If each one is just a little bit less expensive by way of interest rates, that's a reason to start acquiring. So that's what they're waiting to see. And you're
Okay.
exactly right. It hits pause in a big way to see some of this play out. I think it's been really interesting to watch Trump go into the market and make a lot of the changes that he had promised in ways that people didn't expect to be made. I mean, the changes have been um, uh, pretty
Right.
drastic
Right.
in positive ways as well.
Hmm.
But I think with all of that comes other effects, such as, okay, are there reactions from other countries in terms of what tariffs will look like? And how do those now play out? I don't think anyone really had that on their radar coming into 2025 in this way. And now that's part of that uncertainty equation to see where that then leads to then drive additional deal making activity.
Okay, well, that leads to the next question then. And what if there is no, what if there are no rate
Yeah,
cuts? You mentioned tariffs, which are, tend to raise inflationary pressures. If that
right.
happens, and the Fed decides, yeah, it's not really time to cut rates. I mean, what's that going to do to M&A? What I hear you saying is that it's going to cause folks to continue to pull back.
Exactly. It's going to be
Okay.
another slower year if that continues or that momentum doesn't pick up. The nice thing is that Trump has said very publicly that he does want to put more pressure on the Fed to reduce interest rates. I think that's a different approach from Biden,
Oh yeah.
who let the Fed sort of do what the Fed does more independently. But I think Trump has that mentality. He did come out after putting pressure on the Fed after the last meeting in January to say, okay, it's fine that you held interest rates as they are. I agree with that. But I think there's more to come in that storyline of
Right.
Trump putting pressure. To your earlier question about deal values, we did see deal values sort of hit more normalized rates in 2024. I think deal
Okay.
values will continue in that kind of more normalized rate in 2025 because of all these pressures. Coming out of the pandemic, we saw valuations skyrocket just because similarly deals hadn't been done for a long period of time and there was lots of capital to deploy. And I think that's another part of the storyline here too is there's also pressure on private equity funds to deploy capital. So if you don't spend it once you raise it, you can't then go raise it again for your next fund
Right.
because you didn't spend it. And so you
Right.
haven't sort of proven out the track record as a continuous sort of private equity model. And I think that pressure is only increasing for private equity funds as many of them hit pause last year, waiting for the right deals.
Okay.
Yeah.
So, given everything that we're talking about and some of the things that the president has said, I mean, he's
Mhm.
talking about steel, for example. and imports from Canada, Mexico, China, and generally, are there any industries that you would look at right now as being, particularly ripe or fertile ground for deal making?
Absolutely. There are some that are getting huge projections in terms of growth. A storyline you hear all the time is AI being a
Yeah.
big story. But if
Okay.
you look at AI and sort of sub-segment that into different sub-industries to see where that's playing out the strongest in terms of deal volume potential, healthcare is probably at the top of that list. I
Okay.
think we saw that in 2024, global AI market size was something like 26 billion and projected to go north of 600 billion, 10 years later by 2034, which is just explosive growth. And a lot of that comes down to, the first wave of healthcare AI was around how can we make clinicians and physicians just better at their jobs? Is there an
Right.
AI bot that can help read imaging a little bit better or pick up on something that the human eye might miss from a quick eyeball scan? That's now evolved in really interesting ways to look at not just clinicians, but also other staff at the hospital or a broader system. Can
Right.
you we've seen technology, one example is a company called Lean Taz, where you can literally put in questions and say, hey, tell me what the staffing is going to be like for my administrative staff 2 weeks from now. Are there any holes, any gaps, anyone who should be staffed or understaffed? And it's just incredible the amount of information it's able to process for health systems. And that will continue. The other big
Okay.
storyline too within healthcare AI is on devices. So we all sort of know that the Apple Watch will tell you what your heartbeat is and how many steps you've taken. But you can take that so many steps further in terms of predictive analytics. So we see technology using AI radar to increase privacy levels instead of someone being on camera when they're being monitored. And radar can pick up on vital signs, and AI can read that. There's so many interesting technology pieces, and where we see kind of a lot of deals being made consistently and continue to grow is in the venture capital space. So a lot of these
Okay.
technologies are more emerging, growing, need venture capital funding. And we see that being a really hot sector this year because of the prevalence of AI, in particular in healthcare.
All right. So AI seems to be the sort of common thread, especially
Yeah,
in the technology industry and in the healthcare industry. So I mean, so let's take technology. Is there anything else
sure.
beyond just the pure AI companies, or is every technology company now considered an AI company, or at least AI adjacent?
I think it's interesting if you watch the trends within the venture capital industry, a lot of venture capital firms have tried to, I don't want to say rebrand themselves, maybe that's overstating it, but try to change their brand a little bit to have this sort of we're an AI focused fund kind of flavor. And the number of funds that have done that over the past few years is incredible to watch. And so I
Okay.
think that then drives, okay, what companies are then getting the attention of funders if VC wants to just fund an AI as kind of the next big thing. So I think that becomes the driver as to where the dollars go. And certainly AI goes beyond healthcare. So even
Mhm.
just,
Right.
consumer technology, right?
Certainly.
These days you pull up to Taco Bell and place an order and it's actual AI talking to you. It's no
Right.
longer a person.
Right. Right.
So I think even in the consumer space, you'll see AI become much more prevalent. And of course, technology. There's big competition with what's going to be kind of the next big sort of search engine equivalent of AI. Is that going to be something like an open AI or other incumbents like a Google going to be able to keep up? How is that going to play out with some of the emerging technology in China? All that is still largely TBD, and we may be years away from that playing out in a full storyline.
Okay.
But that is certainly coming as well.
Okay. Now, policymakers in New Jersey in the Murphy administration have made AI an important part of
Mhm.
their approach to economic development, the AI moonshot, the program with Princeton. I'm then curious then, can we expect to see some M&A activity in this state or at least in this region, given that focus and given the way the industry has developed now, or is it just too new at this point right now here? Let's specifically here.
Absolutely. No, I think New Jersey is well positioned to be part of the AI boom with
Okay.
the investment it's getting from the government, with the investment it's getting from funds, and even from research institutions, whether academic or otherwise. Yes, that's absolutely going to be a big boom for New Jersey. And I think that will continue.
Okay, and the same question then with healthcare, obviously an important part of
Mhm.
the state's economy, pharmaceuticals, you mentioned devices. There's been a lot of, there are obviously a lot of pharmaceutical life sciences companies here.
Right.
On a smaller scale, physician practices have been targeted by some of the big health systems. What do you see in terms of activity in the healthcare space? Again, specifically in this
Yeah.
region.
I think in New Jersey, what I've seen is that health systems in particular are becoming bigger users of AI technology than they
Right.
had
Yes,
been
indeed, they have.
historically.
Uh-huh.
Yeah, I think historically there had been this sort of thought of how do I use some of the newer technology to run a health system better than I had in the past? And I think of those as those technologies were emerging, they were expensive. And so if you wanted to do something that leveraged better tech in a big way, well, geez, you had to invest millions of dollars. And as a health system, that's a big budget item. That's something to consider or not consider. I think
Mhm.
with AI, it's made the whole process of implementation much simpler and much less expensive. And the upside is highly tangible. You're not creating these, one-off machine learning models for a health system that you hope will work in the way that you're being pitched it will. With AI, you can see real examples as to how these things play out,
Right.
and the speed from investment dollar to seeing some tangible output is much faster these days. And so I think systems like Hackensack Meridian Health and others will continue to adopt these technologies,
Oh, yes.
especially on the excuse me, clinical and administrative staffing side, where we're seeing just a lot more attention, as well as
Yes.
on just the monitoring and diagnostic side.
Right. And I should say, I mean, I've had this conversation with Bob Garrett, who's the CEO of
Mhm.
HMH, several times. In fact, viewers should check out the interview that we did last month, where he talked at great length about AI and what Hackensack has been doing with that. Any other sectors we should be watching? I'm thinking particularly of financial services, because there was a time when consolidation of the financial services industry was pretty widespread. Fintech,
Yeah.
obviously a technology based industry. Where is there any other industries that you see as being particularly interesting, or by the same token, where maybe things have been we're going to cool down because of the kinds of factors that we're talking about?
Yeah, one industry, New Jersey, and frankly nationally, that's been very hot is there's been a lot of investment from outside investors, private equity funds, into accounting firms, frankly.
Okay,
So
right, yes, okay,
it's become the new place of consolidation. You saw the news of Citrin Cooperman taking investment money from Blackstone
right,
after having taken money from New Mountain Capital. So I think that storyline will only heat up and only continue. There's a lot of value to that. So a lot of accounting firms want to compete and grow, and the investment that an investor can bring is palpable, and that's something that can help drive that growth forward. Whether it's bringing on new technologies to help accounting firms use AI better,
certainly.
or simply just growing the platform by way of adding other services that smaller platforms might not have access to. But that's an industry you'll see in the news, at least every month this year, with new investment, new consolidation, and making the industry come together.
Okay. All right. Well, you mentioned private equity firms a couple of times. Are they going to be the most active buyers, you think, in 2025, or are strategic still part of the game?
It's a mix. Yeah, it's
Yeah.
strategic is still part of the game. I think there's a lot of strategic activity still going on. In particular, we've seen a lot of activity in the carve out space. So
Mhm.
we have companies that say, "Hey, especially on the real estate side, hey, we've got a piece of real estate. Geez, we've got a lot of debt on that. It's not our core focus. Let's divest that. Let's reduce our real estate footprint in this sort of hybrid world, and let's find someone to take that on as a carve out opportunity." That often comes to a buyer with at a big discount. So oftentimes a buyer can sort of find really good deals by taking that path. But you got to kind of weed through the different kinds of investments and be in the right place at the right time as those opportunities come up. But that's another place to watch, especially with
Okay.
high interest rates still being in the
Okay.
mix.
All right. And what what can we expect from the IPO market? Do you have any sense for where that's going this year?
Yeah, I think there's a lot of, especially on the tech side, there's a lot of companies that have gotten to a stage where they're IPO ready. Whether that happens imminently or people wait out a little bit longer, TBD. But I think the IPO market is going to be just as strong as it was last year. But there is certainly IPO activity that's going to happen this year because companies have reached that maturity level
Right.
as they've grown sort of post pandemic pretty rapidly.
Well, that's what I was thinking of, is that, we've gotten past the pandemic, and companies were able to sort of, focus on growth rather than survival. I'm curious as to whether there's exits possibilities for them in the IPO.
Absolutely, absolutely, and it's across not only tech but other industries as well, where we've gotten to more of a steady state post-pandemic. It's not looking at numbers that reflect only a post-pandemic boom, but real numbers for what a sustainable business looks like. Those are the kind of businesses that are probably ready for an IPO, where they can show that sustainability to potential investors.
Okay. And finally, before I let you go, I'm curious about how you see the overall economy developing. I mean, I'm not going to ask you for prediction on
Sure,
growth or
sure.
anything like that, but with all the uncertainty, with all the changes that we're seeing, with continued upheaval around the world, um, what do you think as going forward? Are you optimistic that
Yeah.
that growth is going to continue, or are we looking at some difficulty down the road?
I believe growth will continue. I think
Okay.
this year will feel a lot like last year. I think the big open item is going to be around, are there going to be major reactions from some of our partner countries around these tariffs? How are they going to
Right.
react to some of this? And is that going to lead us down an unexpected path where, they're coming back with their own tariffs? I think that's something to watch. But I think this year is going to feel a lot like last year in terms of economic growth, and we'll see kind of where it goes in the second half of the year, but at least in the first half, that's what this is going to feel like.
Okay, very good. Well, we'll get you back, and maybe we'll get an update. Always good to talk deals and deal making with Eric Lewandowski. He's a partner at Saks. Thank you very much for joining me. I appreciate it.
Likewise, thanks so much for having me, Jeff.
And thank you all for watching. Until next time, stay safe, everyone.